Hey guys, Brand Asset Management here, and today I'm looking at IBM, ticker symbol IBM, using my 7 simple steps. Please stick around to the end of the video where I reveal my valuation of IBM using discounted free cash flow and Buffett-Graham intrinsic value. Now let's have a look at the stock price over the last 2 years. You can see that before the pandemic it was trading at around about $153 a share, but then hit a low of $95 a share, which was a great buying opportunity at that moment in time. You can see the stock did rebound pretty strongly and has been trading relatively flat over the last year and is currently at $127 a share. If we compare to the market over that time, you can see the pre-pandemic IBM and the market were pretty in tandem, but since then the market has rebounded very strongly and hit all-time highs, whereas IBM is currently trading below its prior crash value. So this could be a good buying opportunity right now for IBM. Let's head on to my 7 steps. So the first is the P ratio less than the market, and the market is currently 21.5, and with 20.47 that means it's a pass. Now we want to compare it against its sector, technology, and technology has a very high P ratio at 40.5, so this is massively under there. So based on price to earnings, IBM is very undervalued compared to its fellow companies in the technology sector. So 2 passes off the bat. Now we want to look at the revenue, and has increased, and it has gone from 79 billion to 73.6 billion. So that is a fail. You can see that the pandemic year hit them a little bit harder compared to their previous years. It was decreasing slowly, but 2020 was a massive drop off, so that is a fail there. The next step is the profit increasing, and the profit went from 5.7 billion to 5.59 billion. So once again, that is a fail. But if you look at the prior 2 years, you can see the profit was increasing, but a fail nonetheless in the pandemic year. The next are the shares outstanding decreasing, and the shares went from 932 million to 887 million. So that's really good news. IBM's buying back the shares. Now before I head over the balance sheet, I just want to say thanks for watching. Please give a like if you enjoyed the video, give a comment on your thoughts, and subscribe if you want to see more stock analysis videos. Now let's go into my next step, are the current assets greater than the current liabilities? So the total current assets of IBM are just over 39 billion, whereas the total current liabilities unfortunately are just under 40 billion. So that is a fail there again. IBM is very close with a lot of these, could have easily had 6 passes right now, but has only got 2. So that is a fail. They cannot pay off their current liabilities with their current assets. Now this is where things get pretty good for IBM. If we look at the free cash flow, it is increasing, and the free cash flow has gone from just under 13 billion to just under 15 billion. So that's a check mark there. Their free cash flow has been increasing over the last few years. So if we do an average, that gives us 12.7. So I'm going to be looking at their most recent free cash flow number, and that gives us a free cash flow yield of 9.65% and a free cash flow ratio of just over 10. So those are great numbers for IBM. Looks like it's undervalued based on free cash flow right now. Normally we're seeing things in the technology sector of around about 2% or ratios of 30. So to see it at almost 10% and a free cash flow ratio of 10, this is really good for IBM. It looks like it's a good purchase. Now just going to look at IBM, and it does pay a very healthy dividend of 5.11%. IBM's ex-dividend date is the 7th of May, so if you buy it before then, you will be paid on the 10th of June, and they're currently 166 cents per share. So if you actually had 77 shares of IBM, you would get a free share of IBM because you would get $127 in dividends. You can see IBM has got a very good 3-year dividend growth at over 10%, and the payout ratios are good, paying 50% of their net income and 32% based on their free cash flow. So this is a very safe dividend currently, and has a dividend track record of 21 years of consecutive dividend growth. So great news for IBM on a dividend. Very interesting dividend stock. Just quickly looking at the earnings per share, and you can see IBM has consistently beat or met its targets, which is a very good sign. Now to have a look at some of the analyst ratings, and the majority of the analysts actually have it as a hold, but with some on the buy and strong buy side, it has a recommended ratio of bang in between buy and hold, but the price targets are a lot more interesting. As you can see, it's currently at $127 a share. The average is $137, and some analysts even high as $165 a share. So I think the analysts are leaning towards buy, even though the recommended rating says not, because of these price targets. It is worth a play, as IBM does seem quite undervalued in terms of free cash flow. And based on the free cash flow numbers I just saw, I can guess what Simply Wall Street is going to say, and they think it is currently 20% undervalued, as they have a fair value at $161.22 a share. So Simply Wall Street is saying it's a buy. So just to quickly summarise the steps before I go into my valuations of IBM, the PE ratio was less than the market with 20.47 to 21.5. The PE ratio was also less than the sector with 20.47 to 40.59. Revenue has not been increasing from 79 billion to 73 billion. Profit unfortunately did not increase to 5.7 billion to 5.6 billion. IBM has been buying back their shares with 932 million to 887 million. Current assets cannot pay off their current liabilities with 38 billion to 39 billion. And free cash flow has increased from 12.9 billion to 14.9 billion. So that's 4 passes and 3 fails, but as said before, the free cash flow yield and the free cash flow ratios are great with 9% and 10%. Now looking at my model, I have estimated the future free cash flows, and based on this it is currently at a calculated stock price of $260 a share, which means at a 100% discount. Those numbers seem very high, but in terms of the free cash flow I don't think these are out of line. In fact, they're a little bit bearish on some of the projections, more within their 2017 to 2019 numbers rather than their free cash flow in 2020. But the model does have it at an easy buy with a 100% discount and a calculated stock price of $260. And also going on to the buffer grain values, that actually has a fair value of $170 a share and a grain price at $128 a share. So the grain price is a very reserved number, and according to that it is definitely a buy as well. It has been rare to see both of these indicators saying it's a buy, so according to my models IBM does look like a buy. So just looking at the technicals here, I have a 50-day in green, a 200-day in black, and IBM's price in blue. So you can see if we're looking at the more recent numbers here, the 50-day moving average has crossed the 200-day, which would have been a buy signal at this point, and then it has crossed the price. So there's a lot of bullish signals here. And once again the price has broke through the 200-day and the 50-day. So based on the more recent technicals, it is looking like IBM's a buy. Right guys, I want to thank you all for watching. Please leave a like if you enjoyed the video, give a comment on your thoughts on IBM and what stock you want me to do next, and please consider subscribing if you enjoy stock analysis videos, and I'll catch you guys next time.